The bank is very black and white, very numbers, like they only want to see what they can see. And alternative lenders will look more into it and kind of say, okay, we understand this person, maybe their credit's got a little bit lower, and these are the reasons why. But if they get this mortgage, it'll help them and they can consolidate it and they can kind of get back there and get their credit score higher. The way that the economy is with inflation so high, payments being high, interest rates being high, like it does make it difficult for regular people just to be able to, make those payments. We do on a very like on a daily basis is working with clients who maybe have had to get like a second mortgage, or maybe they have $50,000 in credit card debt, or like a loan from Fairstone for $20,000 that's at a really high interest rate. That is something that we see all the time. What we like to do with these kind of clients, especially like I find this like, really satisfying as well, is help them consolidate that. And that's a big thing that we do.
Welcome to the Ontario Homeowners Show. I'm Mohsen Lakhani, and this is the show where we get real about what it takes to own, maintain, and love your home. From renovations to raising a family, legal insights to mental health, no topic is off limits. This is about real people, real value, and real conversations to help you live better, right where you are. Each week, I sit down with trusted experts, service professionals, and local changemakers to bring you the strategies, stories, and solutions that make homeownership easier. This is the Ontario Homeowners Show, powered by the Vaughan Real Estate Advisors. Are you ready? Let's go. Azaan, thank you so much for joining us
No
on
problem.
the Ontario Homeowners Show. Tell me a little bit about yourself. What brings you into the business of mortgages, and how's it been for you?
My dad has been in the mortgage industry since 2007. So obviously growing up, I always saw him. He's always been a mortgage agent. Now, when I was in university, I went to McMaster University for commerce. And during that time in the summers, obviously looking for like a summer job and all that. And I did do a couple sales roles here and there. But then I started working with my dad just kind of on a very administration basis, very simple tasks like putting applications together, files, things like that. It wasn't really anything that was, client facing. I started doing that with him throughout university. And then after university, I worked for a appraisal management company. So I saw the kind of the appraisal side of the business, which is obviously relevant to mortgages now. And that was just kind of random, me getting that job. But then from there, I decided that maybe like my dad wanted me as well to maybe work with him. And yeah, I started from there. And then in 2018, around fall, I did the mortgage agent license test and I went full time. And just went basically full time. My dad had been with the same brokerage since 2008. So I started working with them as well, and we worked with them for quite a while. And this actually January 1st this year is when we changed over to a different brokerage.
So why the change?
It had to do with some like logistical stuff, like some of the other brokerages, like they work with different mortgage networks. So there's like a few mortgage networks that are very big, and then brokerages are usually under those networks. So they just have some access to like some banks and lenders that other brokerages don't. So for example, previously when we were with our previous brokerage, we didn't have access to Bank of Montreal or National Bank. Both of those banks just recently in the last couple of years, like entered into the broker channel again, and they previously were in the broker channel for quite a while. My dad had always worked with them, so they came back to the broker industry and they made a deal. So by going to Mortgage Intelligence, it gave us access to them as well.
Amazing. So basically better products for your clients.
Exactly.
Allowed
More access to
the
lenders.
transition allowed that to happen. Amazing, man. Well, look, it's a tough time that we're in. And when I say tough time, it's we're seeing a lot of pain in the real estate world, but also in general for homeowners, right? And these homeowners have questions whether it's renewals that are coming up, current interest rates not being as low as they'd like it to be, although historically still low rates, especially over the last year that we've seen the drop in rates. Or just in general, the hardship side of things, right? Can you share an incident where something like that homeowner you're helping out overcome some of that stress or a path forward? And it might not have solved 100% of all their problems, but at least get them onto that path where it's a little bit easier to live.
Yeah, definitely. So I've seen two sides of things. Obviously, as a mortgage agent, we have two sides of our business. One of them being people who are purchasing new properties. That's obviously like that's 50%, and then the other 50% are people who need to do refinances or take out equity from their existing properties, or maybe just renewing their mortgage at a lower rate. Um, in this market, I have definitely seen a lot of people who are faced with a lot of high debt. Obviously, the way that the economy is with inflation so high, payments being high, interest rates being high, like it does make it difficult for regular people just to be able to, make those payments. I would say a big uh like example of something that we probably do on a very like on a daily basis is working with clients who, for example, maybe have had to get a second mortgage, or for example maybe they have $50,000 in credit card debt, or like a loan from Fairstone for 20,000 that's at a really high interest rate. That is something that we see all the time. What we like to do with these kind of clients, especially like I find this like really satisfying as well, is help them consolidate that. And that's a big thing that we do like as mortgage agents, right? So, for example, you'll have someone who's in a lot of debt, and maybe they are paying like a decent interest rate with their bank, but then they also have $100,000 in debt that they need to pay, and they're making payments on it every month, and it's really high interest. And with that high interest, debts, the problem with it is yes, you can maybe make the minimum payments on it, but to actually get that balance and get it completely removed is very difficult, especially for the average person. Most people don't just have $100,000 or $50,000 that they can just use to just pay off all of their credit card debt. As mortgage agents, something that we have is that we have solutions for people like that. That's really like what our main service is that sometimes we can offer things that the banks can't offer. For example, maybe you go to your bank and you want to consolidate your debt, and they tell you, you know what, you have a rental property, and we can only use 50% of that rental income, and you're not really making any money on it, and that's kind of a negative on your application. And maybe you're self-employed, but you might make $300,000 a year, in your business, but you're only declaring $50,000. We can only use the $50,000. Now, people like that is where we kind of can really help, just because we work with alternative lenders who really will look at a full story in a different way that the bank will. The bank is very black and white, very numbers, like they only want to see what they can see. And alternative lenders will look more into it and kind of say, okay, we understand this person, maybe their credit's gone a little bit lower, and these are the reasons why. But if they get this mortgage, it'll help them, and they can consolidate it, and they can kind of get back there and get their credit score higher. Or, for example, someone who's self-employed, we know that maybe they're only declaring $30 in income, but we do know that they're actually making a lot more. And most self-employed people aren't going to declare everything that they make, because they got to run stuff through their business. Just tax wise, their accountants don't really recommend to do it like that. So with those kind of people, we can really help them, because we can help consolidate their debt, help them get mortgages that they might not qualify for. um, yeah, I would say that that's a big example. Is honestly, debt consolidation in this market is obviously really important, just because we find that you don't want to get behind on your payments, but you also don't want to rack up like a lot of high interest debt, because with a mortgage, it's always going to be a lower rate than, for example, a credit card. So if we can help you consolidate that really will effectively get you back onto the next step, where you can finally start to get that debt down, and just pay down that one payment every month, and it makes it a lot easier.
Mhm. Talk to me about the issues with um, currently, homeowners. We're seeing record numbers of mortgage defaults. In fact, I think it was last week or the week before, I read an article where uh, the younger homeowners are having, sorry, the younger homeowners are having the hardest time paying off some of these mortgages, right? And I believe it was one of the credit agencies we interview, interview that he mentioned that this is what's happening. What are some options available to the younger homeowners who are having that issue with paying off their mortgage, or
So
homeowners in general? It doesn't have to be young.
yeah, yeah. In terms of like defaulting on mortgages, it is definitely a lot higher, the rate of people that you're seeing that are starting to default on their mortgage. Like historically, most people would make sure, they might get behind on their credit cards or their other debt, but historically they always would be like, we have to pay our mortgage. That's the most important thing. I haven't seen it too much, to be honest. Like a lot of our clients have been okay, and I haven't really seen it where, a lot of people are starting to default. I think it's less common than they news might kind of make it seem like it is. But I do find that people who are maybe getting behind on their mortgage, the main reason why is maybe they're self-employed and their business is hurting, or just honestly like people getting laid off their jobs. That's probably a big factor. I do find that it really does depend on people's spending habits as well, because you'll see some clients who, can like rack up a lot of debt, and that really hurts them, because when their cash flow is, they have to, like their cash flow is down, and then it is hard to just make those payments, including the mortgage payment. But I would say the best thing that you can try to do is just keep your spending to a limit. Really try to avoid paying or getting, like, for example, like car loans that are at high interest or things of that sort. And honestly, keeping credit card debt is like keeping it down is a really big factor as well. It would be easy to say, if everyone can just stay within their budget and really just, not spend on things that are considered luxuries, like that's what everyone should be doing technically. But it's hard to say that, because it's not really realistic for everyone to be able to do that.
Hmm.
And then, people have kids and people have this, and there's expenses that are always coming and emergencies that some people just, they might have to help out a family member or something of that sort. So it's hard to say. But what I would recommend is honestly just doing as much as you can to really just budget, and that can really help. Yeah.
Right. I mean, look, I'll be honest. I had a conversation just last week, right? A gentleman who was I want to call him a professor because he used to teach at one of the colleges that have reduced a lot of the programs because of reduced funding, and then also because of reduced incoming students. Now, the gentleman here ended up purchasing a 1.2, $1.3 million home in 2023. Lo and behold, mass layoffs, programs being canceled and canned. And next thing you know, he's even having a hard time finding something minimum wage, right? And we all know minimum wage will not support a $1 million
Yeah.
mortgage. No way that's going to happen. Now, it's unfortunate for him to be in that situation, but he's literally maybe days away from having to declare bankruptcy. Now, or miraculously maybe ends up finding a job. I'm hoping that happens,
Hmm.
but we all know the job market is tough as well. In fact, we're seeing more and more Canadians, more and more Ontarians, and more homeowners going after having a primary job and then going after a secondary gig, right? Whether it's ride sharing, food delivery, or any other form of extra source of income. Now, the norm used to be, I'm going back decades now, where one partner in the home would be working and the other partner would be quote unquote a caretaker. Now we started seeing a norm since I want to say early 2000s to even maybe, late 90s to early 2000s, where things started changing, and then both people in the home would become responsible for some of the expenses, right? So it might be one person paying all the bills and then the other person coming in and paying for the fun stuff, whether it's vacation, whether it's extracurricular activities for the kids, so on and so forth. We're now into a market where the dynamic is we need three incomes in a household. And as tough as it is, that's the reality. Now, with that being said, unemployment is terrible, is a big issue. What happens when a homeowner is in a situation where they've been laid off, they're not able to find another job, and they're maybe 3 months away from a total disaster? What options do you think is available for a person of that caliber? Or is there extensions that the banks are giving, lenders are giving? working with them? How does that working?
It's honestly it's difficult. Like I haven't come across it too often, but when I have, it has been something where I have to be realistic with my client and just be like, this is the situation. Because for example, there will be some brokers who might say, you know what, that's fine, we can get you a private mortgage and we can pay off everything, and you'll be okay. But when it comes down to it, is if there's no income coming into the house, it's hard to say that we might be able to just get you something very, like, temporary. There might be this band-aid that might help out. But if there's no income coming in, then it's not going to be worth it in the long run, because you might, for example, you could get a second mortgage, just to make your first mortgage payments. And I have seen that before where, it potentially can work. For example, I had a client in a similar situation, and he basically said, I just need a second mortgage for a few months. I want to sell the property. I just want to make sure I don't, go into default or anything. And he had the equity for it. So in that kind of situation, it makes sense. It's like he has an exit plan. But for someone who has no income coming in and doesn't know when the income is going to come in, at that point, as easy it is for me to, get them a new mortgage and, get a commission off of it and all that. I prefer to just be realistic with them and just say, okay, at the end of this, maybe it's like, because you can get, like, for example, like a prepaid mortgage, right? So it's a someone, who has a lot of equity, but maybe they have no income right now and they just need to make their mortgage payments. So the private lender will say, okay, you can prepay your mortgage, it'll just get added to your mortgage amount, and that can work for some people. But the issue is at the end of it, what is the exit strategy? And for some people, it might be to just, at that point before doing all of that, is that maybe it's time to sell the property. Maybe it's time to, see what we can get out of it. It really depends on the situation though. Like, there has to be equity. But for some people that could work. For some people it might not work. What we try to do is really customize it and give them a solution that will potentially help. It's majority of the time there is something that, can be done. There is a solution to help someone, not just in the short term but also in the long term. But that's really tailored to each customer is different, and you have to really look at the situation.
Well, on that point of each customer being different, what's your ideal client? Who do you enjoy working with the most?
Ideal client is not so much someone, for example, who has, perfect credit, perfect income. Like, I wouldn't say that just because of that, that's my ideal client. My ideal client is honestly someone who will, you know, efficiently send me the information that I need, and that's what I like. For example, if I have a client and I talk to them and I say, okay, I'm going to send you an email, I'm going to send you an application, I'm going to send you a list of documents, if you can send me everything. So my ideal client is really just someone who sends me everything, sends it quick, and then I can give them a quick answer. That's what I prefer, right? Like, I want to be able to, like, for example, like, because I'll tell people, they'll ask me, how long will it take for you to look at everything? And it's usually not very long. It's usually like 15-20 minutes, and I can tell you exactly what you can do. I would say that where there's like a lag is usually like, I'll send a client a list and they'll send me some of the stuff, and then they'll say everything's been sent, and we'll go over that and go back and forth a while. But if my ideal client is just someone who sends me everything at once, and I can call 20 minutes later and say, this is exactly what you can do, and it's like very easy. Like, yeah.
So let me ask you this. How easy do you make it for your ideal client to make it an ideal situation? So, in other words, is it easy for them to realize and understand the documents you want them to send you?
Yeah. So what I will do is I'll usually speak to them on the phone. I'll get a little bit of information and I'll kind of explain to them how the process works. I will then send them, I'll say, I'm going to send you an application and I'm going to send you a list of documents. If you have any questions about the list of documents, you can call me. But usually it's very basic stuff. For example, if someone is, a new first time home buyer, The documents that we need are pretty minimal. It's really just like their employment documents. We need to know how much down payment that they have. And from there, once they send me that, it's like it's very easy to tell. Like, we send them a consent form, we check their credit, and it all looks good. And I can just call them right away and just be like, this is exactly what you need. So I try to make it as simple as possible. The reason I give a detailed list from the start is just so that I don't have to, come back to them a couple days later and say, okay, can you send me this? Can you send me that? I try to get everything sent at once. Now, I will warn people that just because I'm sending them a detailed list all at once at the beginning, that doesn't mean that the bank is not going to come back and maybe once we submit it, ask me for this, a couple new documents, and then maybe I send them something and they see something else that they need. They're not as efficient, I would say. So I do have to warn my clients that, like, as much as I want to, get everything all at once, sometimes it's really just not in my control. And banks and lenders, they can go back and forth a lot, especially with certain types of mortgages, like a self-employed person, or for example, if you're getting a down payment and maybe there's a lot of deposits and withdrawals and the account where the down payment is, the bank has to do their due diligence. So they like to go back and forth and find out all the information. But I try to keep it as simple as possible for my clients and just give them a detailed list from the start. It's just sometimes it's out of my control.
I think that's also why, as a real estate agent, I prefer my clients are working with a mortgage team
Yeah.
and not necessarily like a bank,
Yeah.
because your options are limited to that bank.
Mhm.
And the on the flip side, if you're gonna shop around at 3 different banks, guess what? That's 3 different processes
Yeah.
and 3 different credit checks that they're gonna be
Exactly.
running.
Yeah. And every bank will kind of ask for different stuff. So it just makes it
Yep.
like more complicated.
Perfect. Well, what's something about your industry, so the mortgage industry, which you wish homeowners understood a little bit better, or maybe a myth understanding about the industry?
I would say that I do encounter some people who don't really understand what a mortgage agent like slash broker like is of how I think there's this idea that we're, for example, if you do a mortgage with me and I get you a mortgage from TD Bank, they think that it's like different than if they just walked into the TD, the branch and got a mortgage from them. What I try to explain to them is the way that we do our mortgages is for example, we obviously work with different banks, different lenders. We can kind of go to different places for their mortgage. What we like to do is we get all their information, get all their documents, and package it so that, for one, we know which bank to go to because obviously like different banks have different programs and they have different guidelines, and one bank might fit someone better than another bank, and it really just depends on the situation. So what we like to do is first figure out where we should take them, what's the perfect situation for them. And then we like to, package everything together, make it so that it's very easy for an underwriter to understand, very easy for the bank to understand, for a lender. And that's probably the big benefit of using a mortgage agent is that we know where to go, but we also know how to make it spruce it up so that it's perfect before you send it. Versus you go to a bank and you maybe send them some documents and you send them this and you send them that, and you give this to them and then it's like, no, that's a no, so I got to go to the other bank. Exactly what you said. It's like a different process, a different credit check. In terms of a myth that I encounter like really, really often is people who think that if I do one credit check, for their mortgage, that it's going to affect their credit score. So that's actually it's a pretty big myth. Like, for example, if you do one credit check, and let's say you haven't done a credit check for like a few months or something like that, it won't like affect your score. Like it won't really do anything to it. Like your score will like basically stay the same. Because I've even seen situations where, for example, a credit was pulled like one day and then pulled the next day, and the score just stayed absolutely the same. It didn't really have any change. The portion of your credit score that's affected by the number of inquiries is actually pretty low. So that's why it doesn't really have much effect. But what I would say also is if you're shopping around and going to different banks like CIBC and then you go to TD and then maybe you go to RBC and you go to BMO, that could potentially affect your credit score just because you're going to you're getting like multiple credit checks within like a short period. That could definitely have an effect. The good thing, another benefit, obviously, of working with the broker is we do the one credit check, and that credit check can be that report can be sent to TD, can be sent to Scotiabank, can be sent to BMO. It's just the one time, so that's definitely a big benefit.
Interesting. Azan, tell me a little bit about how Dewji Mortgages,
Mhm.
in its essence, helps homeowners beyond just the core services, right? So beyond just here's my application, can I
Mhm.
get approved? Beyond
Yeah.
just that, how are you guys helping homeowners?
So I would say our biggest thing, and obviously I learned this from my dad, is that every client is you have to really like put them in the best situation. And obviously, he's been in the industry for really long. And before like I came into the picture, even even to this day, like I would say 90% of our clients are just referrals, or you know previous clients that have done mortgages with us or have done mortgages with him. Like we'll have sometimes a client call, and like it'll be someone that he did their mortgage for in like 2010. Like it's just that's just kind of how our business mostly is. Like we really don't get much business from marketing, or any of that stuff. It's really just been based on the existing clients. And a lot of existing clients, what I find is we really just try to take care of them and give them the best, the best experience, and put them in the best position to help them. And people appreciate that, and that's kind of where our business comes from. That's our main thing, is that you have to look at every client, and just treat them like like you have to give them the best experience. You will come across some clients who will say, my last broker did this, and this is the situation I'm in. And you can kind of see where people in the industry get a little bit greedy, and they just are just trying to make that next deal, but there's no thought of like, this person could be coming to me for mortgages for the next 30, 40 years. Like like it's like they kind of go after that one deal, but it's not like where they're putting their client in the best situation. So for us, that's really our main thing, is we try to just give them the best experience, make sure that they're happy, and put them in the best situation, just so they know that next time they need something, or one of their friends needs something or something like that, they can come back to us, and we'll make sure to help them again.
Why though?
Like, do you mean why? Like, why
Why
would they come back,
why
or?
not go for the quick buck?
Oh, I think for one, just morally, it's not like something that I think anyone should do. I've seen that even with some real estate agents, where clients will come and they'll be in this situation, and they'll just be like, I'm in this situation, like I really need help, like, and we'll have to try to help them and get them out of the mess. And it can be in like any industry where that happens. A car salesman could do that to someone, a real estate agent, a mortgage agent. It really just it can be anywhere. We don't really support that. We think that morally we just have to help people, and help them, put them in the best situation. But then just from a business perspective, you obviously want to help people so that they want to support you and keep supporting your business, and tell their friends about it, and their friends and family, and,
Mhm.
and they should be comfortable that coming to telling their friend that you can go contact this person, and they're not going to try to scam you or screw you. They're just going to help you, and do the same thing that they did for them. Yeah.
Cool. For everybody out there listening, they don't know you. And if they were to let's say call you up, and you did not, maybe they remember the show, maybe they don't remember the show, maybe a random call in. What's that experience you want to create for them?
Honestly, what I try to do with every client, especially, obviously we get a lot of calls from new people, or referrals from different sources where they want us to talk to someone. What I try to do is I really just try to find out your situation, really get as much information as I can. And then from there, I will tell you, exactly what it is. Like I don't try to, make things seem better than it is, or just like kind of just try to get your business, and that's all I really care about, or waste your time. Like I find a lot of people like to do that. For me, it's really like I like to be straightforward and just tell you exactly what I think about the situation, and what we could potentially do or potentially not do. Because I do come across people who sometimes they might be looking to do something and get a mortgage or buy a new place, and it's just not realistic in that period. But I will tell you, I'll say, okay, right now it's not realistic, but these are the things that you need to do to try to, improve your situation. And that way in the future, you can look at potentially doing this. So that's really what I would say the experience is with me is I'm going to find out all the information that I can, and I'm going to try to give you a breakdown of what exactly I think of the situation. And
What's
if
realistic and what's not,
yeah, exactly.
essentially.
And worst case, if things just don't work out right now, I will try to give you a long-term plan so that at least you can you know exactly what you need to do so that you'll be successful the next time.
I foresee in the next 3 to 5 years,
Mhm.
we're going to be seeing a lot of current homeowners who've gone through, let's say, consumer proposals or bankruptcies, moving towards homeownership again.
Mhm.
And we're also going to see a lot of non-homeowners, so people are renting,
Mhm.
think and dream about owning a home one day. But they've gone through the 2022, 2023, 2024, 2025, and we don't know for how long it's going to continue. So let's call it the post-pandemic era,
Yeah.
right? We don't know how long this is going to continue. We don't know when we're going to see um, well, better economic prospects where people are getting their jobs, where it's balanced. It's
Like
not
a
it's not as expensive, nor is
mhm.
it as
Oh, like a
as
balanced
cheap.
market, yeah.
It's a balanced
Mhm.
market. But eventually, these people with bad credit, with a consumer proposal or a bankruptcy on their credit files, they're going to be entering into the market, whether or not they were a previous homeowner or not. They still will have a dream of owning homes. What options do you think they will have?
So, a big thing for people who, have had some credit problems, consumer proposals, bankruptcies, is what they have to remember is that once they kind of get that situation resolved and they start paying it off and all that, there are options for them to still be homeowners. And honestly, a lot of our clients have been in that situation where they've had proposals or they've had bankruptcies, and they're homeowners still. So what I would recommend is, for example, when someone comes to us and they say that and they say, I don't know if I'll be able to buy anything, what we tell them is that there are always options. Like there are options for people with, lower credit or people who've had this credit history that's been a little bit, like messed up or whatever. Alternative lenders are a really big solution. And we've seen situations where someone might go through that and we can move them to an alternative lender. And what we try to tell them, for example, someone with a lower credit score is this is a temporary solution. So alternative lenders, they're for one, their rates are not that high. Like they're not private lenders. They're honestly like usually pretty close to sometimes what the bank rate is. They have like 1 to 5 year terms, but a lot of people will usually go with the 1 year term or like a 2 year or like a even a 3 year. But what they do is they give people an option because it gives you that time to, just you can still buy a home, you can improve on your credit, and then eventually we can try to move you back to the bank. And that's a really common path that a lot of our clients will take. Like I've seen it where someone starts with a private mortgage and they go to an alternative lender and then eventually they're back with the bank. And then that way it's just like, you're back now. But that's like a really common situation. Like people, have problems from the credit, from different situations, different things that can happen. But I have seen a lot where, we're able to put them with an alternative lender maybe and then eventually move them back to the bank. Like it's always possible.
So we've seen a big shift, right, in mindsets and attitudes. We're seeing the cities, the provinces really pushing for ADUs, so additional dwelling
Mhm.
units or basement apartments
Yeah.
or garden suites. How is that taken into consideration when somebody's coming in? They might be a first-time home buyer, they might be upsizing, they might be downsizing, or they're just an investor. What are they looking at what are lenders looking for if they're hoping to go that route?
So it really does depend. So, for example, the bank is a lot more pickier in how they look at these, like, these rental units. For example, someone with a, property, and let's say they have a finished basement, separate entrance, all of that, but they're not technically zoned as like having a legal, basement.
Hmm.
So banks will usually say, you know what, we're not able to use that rental income, and we can't use it. Versus maybe an alternative lender or like a private lender, even they're like, okay, yeah, we know that they're getting rental income. You have a lease, you have the deposits, we can see it all. So they'll consider it and they'll say, you know, we can still use it. Now, even for example, someone with a legal rental basement, banks are a lot, you know, they like to, you know, just be, they're more careful. So they'll say, you
More
know what?
prepared for the doom
Yeah,
and gloom.
exactly. It's like they know that, you know, things can arise, or like whatever it is. For example, they'll be like, you know, we can take it, but we'll take 50% of it. So it really can, you know, affect people, even just owning a rental property. Like, let's say you have a rental property and you're getting $3,000 rent on it, but then your mortgage is, you know, $2,500 a month. The bank might say, you know what, we can take 50% of that. So now we're just assuming you're getting $1,500 a month. But then obviously you're in a shortfall now, as per the bank, even though in realistically you might not actually be. The bank might just consider it like that. But
Hmm.
honestly, every bank is different. The way that they look at income is, you know, it's like rental and all that. It can really just, it depends on the bank. Like, Scotiabank looks at it differently than TD looks at it, and BMO looks at it differently than CIBC looks at it.
So if you were to generalize, let's say that I'm looking to buy a home somewhere within the GTA, and let's say Vaughan. I want to buy a home in Vaughan with a detached property, let's say somewhere around 2 million. All things being the same, let's say we're going averages and generalization. Having the ability to rent out the basement for let's say $2,000 a month, how much more um how much more can I borrow roughly?
It really varies. It's hard to say like an exact number because it really depends on the situation. You know, like I feel like I do get that question often, but it honestly really depends on the situation. Like, it's hard to
Mhm.
say an exact number.
Okay.
It's difficult to say, to be
Is it
honest.
safe to say maybe 100K more borrowing power?
I wouldn't say that much, but honestly, it's hard to say because it depends on the individual client. It depends on
Mhm.
the individual property. It depends on, you know, what other properties they might have. Sometimes it can be like a significant help, but sometimes it can like really not do much. So that's the hard part about it. And I find that with most mortgage applications is that things will, you know, everything is very specific. Like, for example, you could be looking at a house that's, you know, $500,000 with maybe 2,000 or $3,000 in property tax. But then you might be looking at, you know, that same house in Brampton where property tax is higher, and, you know, the property tax might be 6,000, and then maybe there's condo fees, or something like that. So all this stuff like really plays a big role, especially with first time buyers. That's what I find a lot. Because, for example, well, a first time buyer will ask me, you know, can you pre-approve me? And I have to give them a very, like, I can say, you know, this is what you can potentially buy for, but this is all depending on like the condo fees being maybe
Mhm.
$500. Maybe it includes heat, like, maybe the property tax is only 2,000. So what I'll say to them is I'll give them a very general amount and I'll say, this is your range. But when you actually find a property and like your realtor finds you a property, contact me again before you put an offer. That way we run the numbers specific to that property, because
Mhm.
one property you might put an offer on may have $700 condo fees, and one might have $400 condo fees, and all of that plays a role.
Makes sense. Um, I think as we wrap up, this is my favorite question that we're going into. Everybody has had a different answer to this. So I'm just gonna go out and ask you, what's your favorite part of being an Ontario homeowner?
Being an Ontario homeowner, I would say my favorite part is just the ability to, you know, own and just have free will to do with whatever you want with your property, and just, you know, the I know everyone talks about, especially these days, is that, you know, like the rent prices are all obviously like they're pretty low compared to what they were a couple of years ago, and, you know, mortgage rates are high. So people who are renting are obviously in a better cash flow situation than someone who might have bought a property in like 2023 or 2022. And you could be in the same building in the exact same unit, but the person who's renting is obviously paying less. two things that really matter are, one, you have control of your own destiny. Like if you don't have a landlord that's going to say one day, my kids need to move into this condo, and you kind of have to uproot your whole life and find something new. And moving is obviously a lot of work. Like people, it's not like preferred. But then the other thing is just knowing that every day, every time you make your mortgage payment, you are doing something. You're building equity because you're paying down that mortgage. And it really does help in the long term because, for example, if you rent for 30 years, or if you own, a property for 30 years, like the person who owned the property, they're probably going to have paid off their mortgage at some point. And, that's the main thing, really. Just being a homeowner really allows you to have flexibility. And then there's also different factors. Like, for example, something that we push is getting a home equity line of credit. There's like different tax maneuvers and different tax methods that you can use your home equity line of credit to help build, your investments. And there's different sorts of things you can just do. Honestly, being a homeowner, it gives you flexibility.
So that freedom of flexibility.
Exactly. Yeah.
Amazing. Azaan, thank you so much for joining
No
us on the
problem.
Ontario Homeowner Show. It's been a pleasure, man.
Yeah.
And I just want to say, everybody out there who's listening into this, how can they find you?
They can find me. So you can go to our website, dewjimortgages.com. And we're also on Instagram at Dewji Mortgages, on Facebook, Dewji Mortgage Group. But yeah, all our information is there. And you can always, reach out to us, DM, call, text, email, whatever you prefer. And we will, be there to, help you out.
Amazing, Azaan. We'll be sure to link that up in
Yeah.
the show notes
Perfect.
and the YouTube description. Thank you again
No
for
problem.
joining us. See you next time.
Thanks.